Okay, good evening, everybody. Sorry for the day. The typical webinar problem nesting. So tonight we've got the great pleasure of having Troy Epperson with us. He is I'm not going to go through a whole long line of what he does. I'll let him explain so he can get started. Troy, welcome to the Candlestick Forum. Sorry we had problems getting you in, but we'll let you take it away. We're anxious to see your information tonight.
Thank you so much, Stephen. I really appreciate that. Sorry, guys, for the delay. I can tell you that for the last 15 minutes, my heart rate is going 99 miles an hour because, whenever you're supposed to do a presentation, you're all excited and ready to go, and then you can't get in. So that's worse than even being in a losing trade. My heart doesn't get that racing even on a losing trade. But anyway, so let's have a good time here. We're going to talk about using order flow and how you can use order flow to enhance your trading. Let's go ahead and jump right in. The product that I'm selling today is Order Flow Advantage. It's on $99. Here is the link for that. Now, the reason why I do this at the very beginning is because I know how important your time is. And so if you want to skip the webinar and go straight to buying, that's okay. But in the meantime, for the rest of us, we'll go ahead and go on. So remember that as a retail trader, according to Berkeley Haas School of Business, over 98% of retail traders fail to ever break even. Okay, so they never make any money. They don't even break even using indicator-based trading systems and traditional retail trader methods. So what I'm going to do is I'm going to take just a few pretty standard systems that are out there, or methods. I want to show you how you can enhance those with order flow. So the first one we're going to go to here is a simple moving average crossover system. It's one of the simplest systems in the world. It's one of the first systems most people try. You put a simple moving average on, and whenever it crosses above, you go long. When it crosses below the moving average, you go short. And so it's super, super simple. And you can see that it's only right some of the time. So do you take it here? Let's see if I can put my pen. Pen. Hopefully you can see my pen. Can you see my pen? Like right here, do you take the with the poke through when it poked through the moving average, or do you wait till it closes above it? There's all kinds of little things you have to learn to figure out how to make the system work better. So basically when it crosses below and you get a close below, you go short, and you get the general idea. But obviously, sometimes it doesn't work, and sometimes it gets you out. If you're long and you're in here, it bounces until here's where you would get out right there and go long. And you'd go long, and you get the idea. And so you leave a lot of money on the table. You miss trades. If it's a sideways market, you're going to get seesawed to death. You get the idea. However, if you use order flow with any system, you're going to be able to enhance your system. And so this is the exact same slide with that moving average line right there. And what we can do is we can say, as we're coming up here and it's getting ready to go into, this would be a long, so you'd be going long when it crossed into here. But you can look at the order flow and you can see right there, that's the aggressive buyers. And the aggressive buyers are running out of steam. You can see the numbers, 460 there at the top, 1,076, 1,232. So these are aggressive buyers, and they're on the offer, okay? They're taking the offer, I should say. And as they're coming in here, you can see that the aggressive buyers are slowing down. Contracts, the next price level up, 1,076, next price level up, 460. Prices are going down, or I should say, the number of contracts that are being executed are going down. So the buying is running out of steam. So do I want to go long? No. I don't want to go long. My buyers are not contributing you know, over here it looks like they're going up, but right as this is coming in right here, so this candle right here is saying, order flow is saying, no, you do not want to be long. In fact, it's actually saying the opposite. It's saying the buyers are slowing down and sellers are coming in. The red 672 there, some red, these are called imbalances. These are on the sell side. When you have a stack of sellers, it means you've got some sell momentum. You'd want to get short anywhere in here. Now, it did cross back below the simple moving average, which does give you a signal. So the long here you would have avoided. The short you absolutely would have taken based on the order flow. And you're going to find that this information will enhance. It doesn't matter whether it's a black box system. It doesn't matter whether it's a Fibonacci. In fact, I've got some examples coming up here in a little bit. So first of all, you should be saying, okay, Troy, you got a ton of numbers on the screen. What is the numbers? So I'm going to highlight. This is the shape of the candle. That's almost a doji. It's not quite a doji. This is a green bar. Just drawing around the out. That's the body. There's a little tiny tail at our shadow at the top. So these are candlesticks. And so this kind of is what's interesting is that we're going to enhance the candlestick stuff that you guys are already learning and are already using. So these are candlesticks. It's just what we did. So we took the candlestick and we just blew it apart. We opened it up so that you could see what's inside the candle and you could actually see how the candle is formed. Okay, so this is really cool stuff. You're not just looking at that one candle as it's going up and it's painting the size of the candle. It's painting as it goes up or down. And you see the wicks. Here you're able to see the shape of the candle just like you would on any candlestick chart, but with the additional information that's, let me see if I can draw a straight line. Having trouble with the mouse here. And it gives us two sets of information inside the candle. So we have aggressive sellers on the right, left-hand side, and we have aggressive buyers on the right-hand side. So this is actual volume that comes in. It comes from your time and sales window. This is executed trades on the bid. This is executed trades on the ask. So who is it that is giving, who is executing a trade on the ask? So you have a passive seller that's got his order out there. He's on the offer. And a buyer steps up and takes his trade. He takes that offer. So the aggression is with the buyer. The buyer is the aggressor. Consequently, if you've got somebody on the bid, he's sitting on the bid. He's willing to buy, but he's passive. He's sitting there. Who executes, who makes that trade happen? The seller crosses over and hits the bid. So the seller is the one that's the aggressor. So we can say that all activity that happens on the left-hand side is aggressive selling. All activity on the right-hand side is aggressive buying. You know, this is really important because that's the crux. If you can see who aggressive sellers or aggressive buyers are doing their thing, you know where the aggression is. If you know where aggression is, then you know where price is going to move because the aggressor is going to be the one that moves price. So we have aggressive sellers on the bid side, aggressive buyers on the ask side. And that's where these numbers are coming from, time and sales. Time and sales will tell you whether it was executed on the bid or the offer. So this is, the other thing is that this is not like super DOM data. This is real executed trades. So this is where real money is exchanging hands. It's actually being transferred. The trade actually happens. So at each price level, there'll be a total number of contracts. That says 207. At whatever price that is, on this particular candle, at this particular time of day, that's where this data is coming from. And it's similar to stock level 2 information. So if you're a big level 2 guy, that's basically the same type of information but it's being put into the candle instead of a matrix or a level 2 screen. Just want to give you an idea of where these numbers come from so you have a reference point. Fibonacci, I love it. Love it all the time, looking for the most recent run. Where does it retrace to? 38, 50, 61, the golden ratio. Love it, right? But you never know if it's going to stop at the 38. Is it going to stop at the 50? Or is this going to stop at the 61 or higher? Okay, so what do you Fibonacci traders do? What do we do? Most of us park orders. So we put a limit order. And we hope that it retraces up there to a 38 and we get in, right? And hopefully it doesn't run over us and just keep going up. That's what we hope, right? Most of us are using parked orders if you're a Fibonacci trader. So look right here. If you parked your order there, you got in, and it went all the way to the 50. You may have gotten stopped out, and then it turned around, and it did go in your direction. If you said, no, I'm guessing it's going to go to the 50, well, then you got a great entry, and you're making money, right? However, there's a much easier way than guessing and hoping. You know what, in trading, the worst thing that you can do is start hoping. It's the worst. Hope is a 4-letter word. Okay? We want to avoid hope or guessing. We want to be a lot more sure of what we're doing. So let's take the same chart here and let's look at it with order flow. So there's the Fibonacci that was drawn all back here. There's the 38 fib, the 50 fib. So if we can see that as we're coming up to this, the 50 fib, it's beautiful. I love this. It went through the 50 fib by 1 tick. But if you look at that, you had 22, 98, 811, 411. What is that? That's my aggressive buyers, and they're slowing down. So it's important to understand that the way a change in direction happens, how does a reversal happen? Well, first, if price is going up, the first thing that has to happen is the buyers have to slow down. So you have the buyers slowing down. Check. Got that. Now, what else do we need? Just because the buyers slow down doesn't necessarily mean we're going to have a change in direction. It just means we're having an ebb and flow. That's just the way everything ebbs and flows. The market works that way. 2 steps up, 1 step back, 3 steps up. You get the idea. So it's 2 parts. It's the buyers slowing down and sellers coming in. So that little red 1536, that's an imbalance. That means that there is a unnatural imbalance of aggressive sellers on the left side of the candle. So you have this combination of buyers slowing down and sellers coming in, and then you get the trade. So this one is telling us that the 50 was awesome, but what is as we come into this 38 here, remember we were looking at that other chart, at the 38 here, we took this trade and we may have gotten stopped out. So definitely went against us. The order flow here said a couple of things. It said at 2670 right here, that's not declining. That's increasing. So the buyers, we don't have this sequence of buyers slowing down. We have a lot of buyers and we have even more buyers, and it slows down at the very top. We're not getting this, what we call this is a sequential decline. So it's saying, hey, it's not really ready yet. Also, we have a delta. This is called the delta. This is the summation of all the buyers and all of the sellers combined. Okay? So that's a positive number. So on balance, we have more aggressive buying than selling. Look at the number, 2597. Look up here, only 214. And then you want to look at the bar-to-bar difference, 1169 to 214. Still positive, but a major slowdown in the number of aggressive buyers. So that's one thing. The numbers you see across here on the bottom, 1 by 2, is the number of reds and the number of greens. Okay, so these are imbalances. The reds are sell imbalance. That's red. And the green ones on the buy side are buy imbalances, and they're in green. And this little summary tells you the summation. So a lot of times you'll get this one's got a 0 by 0. So there's nobody that's dominant on this particular candle. That also is going to be something we want to see at the top, is that it's shifted. Remember how does a change in direction happen? It's when buyers slow down, stop buying, sellers start selling, and there's no one, and having no one that's dominant shows you that, that's where the crossing point is. It's when they equalize. When buyers and sellers equalize, price stops going up or stops going down. So lots of really great stuff inside of the order flow. Now, this particular product, this OFA, the Order Flow Advantage software, is our beginning product. Okay, so we have more order flow stuff that's much more advanced. However, this comes with a 10 class tutorial that's amazing. Even people who buy our more expensive products sometimes will buy the OFA just to get the education piece. So the education piece is really, really good. Double top. I love these interests. This is actually one of my favorite. I'm a short guy. I love going short. And intraday swing points are phenomenal. Love them. So I'm always looking for these intraday swing high to a double top. So do you take this or does it keep going? That's always the question. Again, we'll take a look at that exact point, but we'll look at it. Whoops. So this is the same exact point. So what is the order flow? Again, what does the order flow say? What is it telling us? Well, let me put my pen back on. There's that same sequence right there. 1641, 1318, 294. Delta, positive 899. Next bar, Delta shifts gear. And we got net selling. And finally, we have example of sellers coming in, that 244 red. So this is the trigger. So first I have to have a trade location, which is the double top. Then I need to see that the buyers are slowing down. And consequently, that's only the first step, or actually the second step. The third step is I need to have sellers coming in, and that's a sell imbalance. So 244, I get short, love it. And obviously I'm going to show you lots of these examples. The point being is that it's pattern recognition. So you guys who are learning all this cool stuff about candlesticks through the Candlestick Forum, which are awesome, all of that stuff is relevant in this case, okay? It's all relevant. The shape of the candle, whether it's a doji, whether it's a harmony, whether it's a spinning top, those patterns are all relevant to this. Any system, this is going to be enhanced because we can actually see the flow is confirming the pattern. So now we're not guessing if we want to take a shot at this double top. We're saying, ooh, I got a double top. What does the order flow say? Ooh, sequential decline on the buyers. The buyers are slowing down. Okay, all I need now is, are the sellers coming in? Oh, there's the sellers. Pull the trigger. Bango, I'm short. Very, very cool. I'll try to answer some of the questions, but you guys are obviously scrolling a lot of questions. What is this 1169? 1169 and 214. Okay, so 1169 and 214. So all the numbers, I'm not sure where those numbers are. Maybe that was from, oh, that was on the last chart. Sorry. Okay. So let's go over the numbers real quick. The numbers, let's pick a candle. So we're going to pick this candle right here. So the number at the top is the delta. That's the summation of the aggressive sellers. They get a negative number. This adds all those up on the left-hand side. The right-hand side is the aggressive buyers. Those are the ones that are buying off of the offer. They get a plus. So you add these up, subtract these, and that gives you a net. So on balance, there's 2,221 contracts that are aggressively bought. And the key here is, again, remembering that we're looking for behavior. Behavior. If we know what the behavior is, then we can predict what will happen in the future based on that behavior, because we are humans. Okay, I love telling this story about my son. My son is 10. This happened when he was about 6. We had been trick-or-treating on Halloween. You have 2 gallons, 2 giant sacks full of candy. We get back to the house. We're spread it out on the living room floor. We're going through all the candy. And he's, I want this candy. I don't want that candy. Yeah, you go through and you look at all, and everybody in the house eating candy, right? Well, the bag of candy we're going to keep goes on top of the refrigerator. Okay, so let's just say that it's obvious what is going to happen. Dear old dad can predict the behavior that's going to happen. Candy on top of the refrigerator. Dad goes into the garage. 6-year-old pulls the chair over, climbs on the chair, climbs up on the cabinet, and is on the top of the refrigerator eating candy. Yes, it's predictable. Behavior is predictable. What are the volume here? So we get volume plus price equals behavior. Okay? Volume plus price equals behavior. This, my friends, is behavior. All the numbers on the inside here, or around the candle here, on this candle, are actual contracts that are executed. The right-hand side is execution on the offer, which is aggressive buying. Executed on the bid, aggressive selling. Bottom numbers, 1 by 2 here, it's 1 red to 2 greens. This gives us a snapshot of who the aggressor is on this particular candle. Awesome. Ron just said this is the first time someone actually explained order flow to him. Awesome. Okay, so that's awesome. That's what I want to hear. All right, let's do a double bottom. So this is also a W pattern. Yeah, you see those patterns. One of my favorite candlestick patterns is W. And I'm just going to draw a line across the bottom here. So how do you know if you're going to take this trade? How do you know it's just not going to blow down and go to lower lows? Well, we can do what most people do. They'll buy the low, or they'll buy a couple of ticks above the low, and they hope. They park their orders, right? You got it, okay? So let's go back to the double bottom. There's the double bottom, so it's over here. Does the order flow tell me to take the trade? Bar before, what's going on? This is the sellers. Remember, this is the aggressive sellers. Aggressive sellers are selling here 24, 49, 13, 57, 40. My selling is drying up. They're real aggressive, 2,400, 1,300, all of a sudden 40. Okay, what about this one? So this bar here, the actual poke through it, pokes through. 824, 818, 603. Again, what are my sellers doing? They're not as strong. Each consecutive price level down, there's less aggressive selling. Now, what's the rule? Just because I have selling slowing down doesn't mean the selling is over. So, what am I waiting to see? I'm waiting to see a green number where there's a green buy and balances. This means the buyers are coming in. I get long. Bingo. Yay. Making money. Now, what's interesting is that this, erase that. This also had green right there, had green right there, and green, of course, right there. Now, part of the challenge of learning how to use, okay, so the blue here just means that there is the net value of the two, the aggressive buyers and the aggressive sellers, is positive. Blue is positive here. Red is negative. Okay, so the balance, the overall balance of the buyers and selling, there's overall negative selling, aggressive selling, and overall negative buying, or such overall positive buying. That's what it is. But the challenge here is to use more than one candle to get a more full picture. Okay, a more full. I can't say more full. A fuller picture of what is going on. So we're not going to use just one candle to make our decision. It's always going to be at least 2, 3, or 4 candles. And usually it's each candle is telling you a story. For instance, we went from negative to positive to more positive. Then we had a little bit of a retest. We went negative, came down. This is the blow off bottom. Okay? So we came down, the selling slowed down, some buying came in. We even got an up bar here. Sellers slowed down, buyers came in. We ran up a little bit, and then we had the final push down to take out the weak hands. They took out the low, and bingo, reversal happens. We have sellers slowing down, buyers coming in, and again, that's where we want to go. You can't see my pencil moving? You see what I'm drawing though, right? Yeah, okay. Pivots, okay? Pivots. Everybody loves pivots, right? So this is S1. That's R1. This is the actual pivot. This is S1, S2. Again, arbitrary, where you put it's coming up. Is this thing going to reverse when it gets to that, or is it going to bounce and go up? What are you going to do? Again, at this point here, we're going to evaluate the order flow. So again, you can be a pivot trader, a Fibonacci trader, you name it. This is going to enhance your system because it gives you a way to confirm whatever your trade entry point is, your signal, your Fibonacci, whatever it is, you name it, you can do it with this. You can. So here's the pivot on the S1. It's coming down. Again, you're looking for, where are we? Oh, we're looking up here. At the pivot point, it's coming down. S1 is supposed to be support 1, right? Look at this right there. So we have 900, 600, 1650, 124, and look at, there's a 0. There's no buyers. No buyers. Big negative delta. Okay, next bar. Well, the sellers are slowing down. Yeah, the sellers are slowing down, but again, no buyers, 0. Also still negative. You're not going to sit here at this point right here and go, I'm going to buy it. Like, no, there's too much momentum. Sellers are not slowing down, and there's no buyers coming in. Even on the next bar, nothing's happening. Nothing's happening. Finally, we get over, we actually don't have we actually never get a signal all the way along here to go long. Notice there's no sequential decline. No sequential decline. There we have sequential decline, and we have a buy response. Here we have a sequential decline. There's your buy response. There's where I'd be getting in right there. Might have a little bit of pain. That's the blow-off bottom, and there it's going to go up. So it doesn't matter where you're picking a point in time and saying, does the order flow confirm my entry point, whatever that entry point actually is. Okay, so why is there a 0 at the bottom and a 0 at the top? Okay, so that's one of the questions. So what that's saying is that there's no one left to sell. There's no one on the offer here. There's no one left to sell, so it's not going down any farther. So you'll see zeros on the bottoms on the right-hand side, and you'll see at the top. So remember that this across a candle, we want to exploit all buyers and sellers. And when we don't exploit them, that's actually called an unfinished auction, and that's a whole nother product and tool. But that zeros are basically saying on this side, there's no more. We can't go up anymore. We can't go down anymore. So the zero on that side is saying we can't go up anymore. We can't go down anymore in this candle. We've exploited. The auction is finished on these candles with zeros at the top and the bottom. Good question. Let's see. Let me close that and let's keep going. So I've made a graph here of a black box system or a signal service. I know a lot of you guys will subscribe to a signal service, and it says, buy at what such and such a price, or it'll say buy now, And so I made some fun. This is a special secret line number 1. We're going to look at that spot, multiple spots, So here it was a good signal. Special secret line number 1 was a great signal, right? And this one was not, okay? Because I assume when it goes up, it's going to go. You want to go down. You're going to short it there. Super special secret line number 2. Super special secret line number 3. You get the idea. Let's take a look at these exact points on the order flow. Secret line number 1. Okay, so let me go back so you can see. So that's the spot. This is the spot we're looking at. So here, it's going to tell me to short it to go this way. What does the order flow show? Holy smokes, as we go into that, look at that. That's acceleration. 1,062. Next level up, more buyers, more aggressive buyers. 1,276. Next level up, 3,507. Prices going up. It's getting more expensive, but what? There's more buyers? You think I'm going to short it there? Absolutely not. No, not going to do it. Okay, so you can see the momentum inside the candle as this thing is moving up. There's no way I'm stepping in front of that train. Yet, at the same exact time, we come back to the line. If this is your special line, can we go long here? Absolutely, right there. So we got 32, 22, 16, 26, 17, 14. What's that? It's on the left-hand side of the candle. Means the sellers are slowing down. Buyers are coming in. Maybe not a lot of money to be made there, but you can see how the order flow at these trigger points basically says, yes, I want to take the trade. No, I don't want to trade. Okay, take away that I'm going to park my order here and hope it works. Right? There's nothing worse than an educated guess that doesn't work. I'd much rather be able to see the flow and say, yep, it's going higher, or nope, it's going lower. Or yes, I want to be in this trade. No, I'm not touching that trade. I don't care how good the fib is or how good the black box is. There's still going to be trades that don't work. Well, this way you can avoid those trades that don't work. Only take the ones that do, or at least are setting themselves up to do what you need it to do. Let's see, got another one here. Here's where it comes down. Special secret line number 2. And you have multiple right there is this, as it comes down to it, 2316, 1854, 232. What's happening? Our sellers are slowing down and our buyers are coming in. That's the green number right there, green number right there. Get long anywhere in there. Yay. So is this for scalpers? That's a great question. Thank you, Edward. This will work for scalpers, but you're gonna it's harder because as a scalper you're going to be on maybe a 1 or a 2 minute chart, and the order flow is best when there's enough order flow to evaluate. So for the S&P, you can absolutely do it. This works on a 3 or a 4 minute chart as the sort of the bottom. I wouldn't use it on a 2-minute, but if you can stand a 3-minute chart, you're going to get enough order flow data in those candles to be able to scalp with it. Absolutely. It will also work for swing traders, because what you'll do is you'll still use this on a 7 or a 10-minute chart, 7 or 10, and then dial in for your entry. So you can. You're not going to put this on a 60-minute chart. It would be useless on a 60-minute chart. So it's primarily for scalping and day trading. We've got one more. So this one, it comes down to the line. And so the question then is, are we going to go long here when it comes down to it? And again, if we look at the numbers on the inside, you can see that we get 931, 13, 25, 1743, 1755, 2037. What's happening? Price is going down and it's accelerating. There's more executed trades as price is getting cheaper. I am staying as far away from this long as I'm running away from this long. This thing's got way, way too much momentum to the downside. So it keeps you out of trades and it puts you in trades. So, if your system is got some losers, you're going to be able to limit the number of losers. This is not foolproof. Every system is going to have, even order flow will fake you out once in a while. So it's not perfect, but it's certainly a way to enhance an existing system. And that's sort of the key that I want you to take away from this. We're not mad scientists. We're looking at order flow in the form of price plus volume equals behavior. Behavior, I should be able to do it. Old way, use a candlestick that's closed. You can't see the information inside. New way, open that candlestick up so we can see how it's forming in real time. Very, very cool stuff. Again, simple moving average this way, where you're kind of guessing, or use the information inside the candle give you an extra edge. When you can see it, so this does not lie. It's not that it's perfect, but it's showing you real data in real time as it's happening. Take that I can't to make it a I can. I love that slide. You don't have to be pulling your hair out. You can sit there and confirm every one of your entries with order flow, and you're going to dramatically enhance your system, whatever that system is. And so all you're doing is looking at the stars. Order flow advantage, there is the http://NOF-traders, plural, .com/AUG22 for August 22nd. This system, or this software, works on NinjaTrader, so you must have NinjaTrader. NinjaTrader has a free version that this will run on, NinjaTrader. Oops. NinjaTrader. This is also available for TradeStation as well. So we actually have two. It works primarily for futures, but it will work on some ETFs. It will work on some ETFs, but it's primarily a futures product. And I believe that is my last slide, so I can take questions. I've been trying to answer some of the questions along the way. Look, guys, this is obviously an introductory, getting you in the door to order flow. So maybe order flow is not for everybody. It's going to cost you $99 to find out, and if you don't like it, that's fine. Okay, it only costs $99. It's not like you're sinking a big pile of money into it. Okay, it comes with a 10-day video course. Each lesson is about 20 minutes, and I'm telling you that People love the video course. It's worth it all. It's very, very worth it. You get two tools. You get the order flow visualizer, which is the one that I was showing you, and then you also get a order flow pattern spotter. This looks for a specific pattern. Two specific tools that come with this package. I would not run it on a daily chart, no, Kareem. This is primarily intraday. A 60-minute would probably be about the highest time frame that I would use on for the order flow visualizer tool. What is the difference between red, green, and gray numbers? Let's see. Let's go back. Okay, so red right there. That is called a cell imbalance, and it's comparing. It looks for us. It's looking for a difference between what's happening on the bid versus what's happening on the offer. And when that is a certain percentage, it highlights in red. So it's called a cell imbalance is red, cell, and the green number right there is a buy imbalance, which means that there's at least 300% more aggressive buying than aggressive selling at that particular point in time. So it's a buy imbalance. This numbers across the bottom here are the summary of the imbalances. So 2 to 2, there's 2 reds, and right there's a red. So there's 1, 2, and there's 2 greens. And the number at the top is either blue or red. Blue if it's positive, which means it's taking the aggressive sellers and the aggressive buyers. Minus aggressive sellers equals delta. Delta is that number. So it's either red as in negative or blue as in positive. Yes, Bill, the gray right here, gray, there's a gray on every candle. That is called, we call that the COT, commitment of trader. But it's basically the highest volume price within the candle. So it would be, this is equal to a candle POC, or point of control. So we call it a COT instead of POC. It's called candle POC. So it's the highest volume price within the candle. That's shaded in gray. Yeah, Kareem. So Kareem has an issue because he has less than $25,000 in a Think or Swim account, and they don't like day traders if you're under 25K. So Kareem, the answer is open a futures account. Because a futures account does not have the same baloney rules, is that Reg T? That's the new Reg T rules, or no, it's the new day trading. What do they call it? The day trader. I don't even remember. It's day trader rule that kicked in a few years ago. That, or you could open a cash account because if you're not using margin, then a pattern day trader. Yeah, that's it. You're right. Thank you. Thank you. The pattern day trader rule. You can tell it's been a long time since I've traded stocks. I trade futures and forex, and that's don't have any of those baloney rules as a futures trader or a forex trader. Pattern day trader rule. Oh my God, you're hurting my head now. That's funny. So yeah, Kareem, you want to just move over to futures. You can get a lot more bang for your buck from a margin perspective in futures. But yes, that is a problem. The pattern day trader, for everybody who's got less than 25,000, you have to deal with that pattern day trader rule. Sure, you could use this software in addition to any other software. So you can always have a charting package, and you have your in this little corner you have your little order entry window for think or swim or whatever, but you use this as your main NinjaTrader as your charting software, and you can get NinjaTrader for free. You can use it for free. You have to connect a data feed to it, but you could use the free NinjaTrader and still keep your Thinkorswim account. That's certainly a possibility. Now, I know that we started late, but I was told that I had to be completely done by 9 o'clock with questions, so I am pretty much there. So, Stephen, let me put my offer back up real quick, and I think that's about it. Oops. So check this out. It's really, this like I say, this is probably our highest value. You get a lot for your money, and again, the 10-day course is really worth it. That's all I got, Stephen.
Troy, good stuff. Everybody, for the price, take a look at it. You're getting a lot of information. And this puts another arrow in your quiver of being able to see things that are putting the probabilities in your favor and letting you move a little bit faster on your trade. So, Troy, this is good information. Everybody take a look at it. You're not gonna be disappointed.